income statement, balance sheet, and statement of cash flows are three heavily used financial statements of public companies. The balance sheet is a point-in-time snapshot of the financial position for the company. The top portion of the balance sheet shows the assets of the company. These include tangible assets such as inventory, factory, and land, or intangible assets such as goodwill or trademarks. The assets section is divided into current and non-current assets. Current assets are likely to be liquidated within 12 months, such as cash. Non-current assets, like land, are not likely to be liquidated very soon. The lower portion of the balance sheet is the liabilities section. This is also broken out between current and non-current with the same time frames attached. These are items that the company owes, such as utilities, rent, or long-term loan payments. The difference between the assets and the liabilities is called owner's equity. This is what remains of the assets after all liabilities are satisfied and can then be spread out among various stakeholders of the company. While the balance sheet is standardized for comparability, not all balance sheet items may be comparable across industries or companies. A thorough review of the footnotes is required to understand the line items and what is represented in the number. One example is the depreciation of property, plant, and equipment. Companies have a few choices on how they would like to depreciate fixed assets, and that choice can have a material impact on the net numbers. Many useful ratios and growth rates can be calculated from the balance sheet accounts. Debt to equity and book value are good examples. Some ratios combining balance sheet items with income statement items, such as return on equity, are very useful too. The balance sheet is an array of raw data that can be analyzed in many ways. Some of the more basic ways might be to view the trend in the account back through time. For example, Johnson & Johnson's cash and equivalents are shown below to have grown in most of the years detailed. The latest value of $29 billion is much higher than the 2004 value of $12.9 billion. Another way to view the balance sheet is by column. For example, in 2013, the $132 billion in total assets entails $59 billion in liabilities, leaving $74 billion for stockholders' equity.